Hello guys again. This is a euro-dollar daily chart, and I will try to make a daily market geometry analysis based on this chart. Now before proceeding, the main event of the last trading week was definitely Mr. Bernanke's testimony in front of the Economic Committee. He didn't say anything new from my point of view. He said that they are going to, most likely they are going to withdraw the stimulus, the quantitative easing program from the market as early as September if the US economy is improving. Now, if it is improving, it remains to be seen. From this moment on, from my point of view, when you look at when we will have economic releases out of the United States, look at a positive release to be positive for the US dollar and a negative release to be negative for the US dollar. So we are coming back to normal after the new normal with risk on, risk off events is probably done for now. So what we had a sell-off at the moment that Mr. Bernanke spoke here, only to be followed by two green days in the euro dollar. And according to this market geometry analysis, I would like to take a look at this. I would like to have a trend line like this. That should go something like this. And you might ask why. Well, this area here, if you take a look, so I would like to project it exactly from this low here. If you take a look, this trend line here did actually offered support, then broken, and now resistance and resistance. And what I would do next, I would try to copy this trend line and put it on the previous area here, and try to project it forward. So we are respecting the same angle, and as you can see, when price coming from the upside, is making a nice support, then resistance to the upside. So all of a sudden price turns here. Why? Okay, after this is cleared, broken, and the resistance moved to the upside. So I would say that, let's take a shape, and I would say that this is the first area of resistance, second one, and the third time. So this is one, let's say one, two, three. So 1, 2, 3, and then we have a fourth time that this area has been touched. And then what I would do next, I would measure this channel. So I would take a Fibonacci retracement tool, and let's measure this channel, and I will look for 50% line out of this 50% retracement of this channel. Why? Because this 50% line usually, sorry about that, usually has the tendency to attract price, and put it just on the 50% line like this, and let's make it blue. The 50% line, and as you can see, it is quite important because price, after being rejected here as a resistance, finds support, broken. Then almost there, resistance, okay, almost there, resistance, broken, traveled here, and then rejected to the downside. Now if you measure the length of this channel like this, let's make this one of a different color. Let's make this one, for example, brown. So if you measure the length of this channel and you project this channel to the downside, like this, you have the exact values of where price hesitates. Now why is this important in terms of market geometry? It is important because when price traveled, remember our initial line was this one. When price travels from the upside here to the downside here, then it has been rejected and it made a retracement with this kind of an amplitude, okay? Now this kind of an amplitude, let's make it red. But if you take and copy this amplitude and put it by the moment of break here, you have exactly the lows here. And this being the case, we might have mirroring images, and because of these mirroring images, then I'm looking for this move to be respected also in here and to the upside. Now, if you take also this one from here and put it here, okay, or something like this, or from here, it might be not necessarily. So, out from this we have 1, 2, 3, 4 times this upper trend line being retested. Now the same here, you have 1, okay, and here almost 2, 3, and then 4 times. What we have here, the structure on the right side here, seems to be the same with the structure here. So I would say that we have this level tested for the 3rd time with a higher high, with a higher low. Sorry about that. So this is normally. So one, let me change the color. It proved to be support here, 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 but only making a marginal high. So this was 26.61. This is 27.49. This is 27.96. Now, providing this 27.49 hold, or maybe even if we go a little bit lower than this, okay, we still have this 26.61 that should keep the bullish bias on the pair. Now, judging by how market reacted at this level, see here, and then it rebounds towards the previous line. So here we bounce to the previous line. Here we bounce to the previous line. I don't think normally this one should not offer any more support. Normally, if here we're going to consolidate in a contracting triangle like A, B, C, D, E, and then break to the upside, that would be 1. But I would say most likely that this is an A and a B, and looking for a C to come into this area here. So I would say that this contracting triangle might go towards let's say an A here. So this to be an A of this degree. B, and then the C where normally should come at this blue line, and this blue line should be something like 135.38. Now, if you check the previous analysis that I posted this week on the 4-hour chart on the euro-dollar with Elliott Wave's analysis, you are seeing that actually I'm looking at 2 scenarios, either a contracting triangle here, either a contracting triangle here with A, B, C, V. So this to be already part of a C and a B here in the makings of a higher degree. But it remains to be seen. Anyways, the target, according to this market geometry, first target should be here before taking the highs here. So this area is 132.44. This area is 132.44. 132.50 is here. 132.40 area here. So before this 132 area is going to be the first target, and then the second target I would say again here. So look for something like this. So look for something like this. Then I don't know, maybe consolidating a bit here, and then to make another leg higher here. that should be the target for the viewer. And then all the eyes and all the pressure would be on these highs. If we take these highs, then the next normal move would be towards the next line. But if we respect this angle, so this is the angle of the move, and indeed this is the contracting triangle that goes with wave A here. Let's write here that this is a support, this is a support area, the support line, so support line. And this one here to the upside is the resistance line. Okay? Now, if this triangle is going to evolve like this, like A, B, and then a C wave to the downside, that should meet again this trend line. Okay, so we will play with these lines by the time we will have more clue. Let me project it even forward, and let me also project this one forward. And definitely, I will keep this analysis and will try to update it all the time as market will make its moves. Now this is what I wanted to show. Going into the next week, I'm looking for a bullish week. Maybe a retracement for the beginning of the week into the 2880, 2870 area. But then look for buyers to step in and try to attack the 130 again. And the eyes are going to be on the 131 and 131.50. So until next time, stay safe from the markets. Bye bye.